Okay, thank you very much for joining us here on the European crossover webinar. And let's take a look here. We did see gold going and drop down into this 1197 area here. It'll be just one moment. And we have seen the dollar index. Let's go. Paired back just a little bit. We're into that key 97.46 area here that we pointed out previously. Well, actually, we're looking on a 30-minute, but we'll take a look at here on the 2-hour. Right there, and we've got a little bit of a medium-legged doji here. And the euro starting to work up. Now, we had our support yesterday at the 1234, and then we mentioned a secondary support at 1217 in the chat room. And that's actually where they ran down there and made it. Moment. Right in here. Well, they actually went down 1215.5 or 16. We'd mentioned the 1217. They're trying to pull up a little bit here and trying to find something. Now we have the Italian news that's going to go on and they're supposed to go on and resolve their budget day. I don't know whether that's going to happen or not, but we did see gold make it down here to this 1197. We did get a bit of a bump after coming almost to 1200 even, a bump to almost 1206, and then we've rotated lower to come down and come to that huge area here at 1197. This has been already a pretty big fall here. Look at here. We just come right down. That's actually the 78% there also. At 1198, 1197 is that key area here. So we've come down here to the 78%. We're going to move this. There we go. Right here. And actually pretty good, decent area. I mean, I would look for some, if we can get the dollar to ease back a bit, this will be a good, decent, bounceable area here. And the dollar yen has made its run back up here, almost to that key 1422 area that we point out in the Asian analysis from over the weekend. And cable, trying to find a little bit of a ground. We do have a gap here to fill. Right there, 29.59, trying to make another run back up there after a pretty good fall. And we did get German inflation CPI. Now, as I mentioned, we are expecting some weaker growth coming in out of Germany this week. That's obviously going to continue to weigh on the euro, but really the Italian news is really the bigger news here. And coming into the States, pretty light as far as news this morning coming into the States. Did get UK monthly data and employment and pay growth here. The data coming out of the UK this week is actually supposed to be positive, you know, for the cable. And we are still starting to see a bit of a rebound here from this oversold territory, but let's go on and move into the news for the day. So the Canadian dollar edges higher and oil prices rebound, supports. Dollar CAD still holding up very well. Look at this. The Canadian dollar edged higher against a broadly stronger U.S. dollar on Monday, supported by a bounce in the price of oil, but remained close to multi-month lows touched on Friday. The price of oil, one of Canada's major exports, rose by about 1% on Monday, set for its largest one-day increase in about a month after Saudi Arabia said OPEC and its partners believe demand was softening enough to warrant an output cut of 1 million barrels per day. Saudi Arabia, the largest world exporter, said on Sunday it would cut its shipments by 500,000 barrels per day in December due to seasonal low demand. The U.S. dollar rallied to a more than 16-month high on Monday as investors positioned for a Federal Reserve interest rate next month and concerned about political risks in Europe put pressure on the euro and the pound. Typically a strong U.S. dollar environment, the Canadian dollar gains on the crosses, says Mark Chandler. Australian New Zealand dollars get a boost from hopes for U.S.-China trade talks. The Australian and New Zealand dollars reversed early losses on Tuesday on a media report that China's top trade war negotiator was heading to the United States to prepare for talks between the two countries' leaders. The Sino-U.S. trade war has been a major overhang for financial markets this year as investors fear global protectionism will hurt China's economy as well as the world growth. Treasuries, Tuesday's source-based report in Hong Kong South China Morning Post was perceived as positive by the market players and lifted the Aussie dollar. The currency, often played as a liquid proxy for Chinese assets, was up 0.5% at 72.13. The Aussie had stumbled about 8% so far in 2018. This is good news, so we've seen a good improvement in sentiment across the market, said Rodrigo Cotrillo, but there's still some caution. We obviously need some more detail on it. This should also be taken in the context of new retaliatory measures that the U.S. is considering against China. Earlier, the Wall Street Journal reported, citing sources, that the Trump administration is broadening its China trade tariffs battle beyond tariffs with a plan to use export controls, indictments, and other tools to counter the theft of intellectual property. Earlier in the day, a survey showed Australian business conditions and confidence declined in October, driven by a slowdown in firms' intentions to hire more workers. The New Zealand dollar got a lift from media reports saying Louis will visit Washington. The currency was up 0.5% at 67.44. The Kiwi was held on last week's gains as investors continue to see a falling chance of a rate cut, followed surprisingly strong third quarter labor data last week. The Reserve Bank of New Zealand has shifted to a neutral tone after earlier indicating rates could go down if economic data is disappointed. The resilience of the Kiwi is probably explained by further unwinding of Kiwi short positions as the market continues to recalibrate its RBNZ expectations in the wake of exceptionally strong NZ employment report. And on to the pound. The pound rebounds of UK minister says the Brexit deal possible this week. Sterling extended its gains on Tuesday after British Cabinet Minister David Lidington said the Brexit agreement was still possible in the next 24-48 hours. The British currency had tumbled on Monday on signs of an agreement with Brussels on the terms of the UK's exit from the European Union was still some way off. Prime Minister Theresa May said on Monday talks were nearing their end game, but considerable issues remain unresolved with the European Union. Amid talks this week could be the Cabinet's last chance to secure an agreement to present a November EU summit. Ms. May's proposals are tasked with healing an increasingly divided Conservative Party, while also keeping the party's DUP allies on side, said Neil Mellor. The pound on Monday hit its lowest at 28.27 since November 1st against the dollar versus the euro if it remains close to a 6.5-month high. The euro drifts up, but Italy and Brexit talks weigh. The euro drifted up from a 16-month low on Tuesday as a pause in the dollar's rally prompted some investors to purchase a single currency, though concerns about Italy's budget proposals and Brexit negotiations are likely to cap any gains. Tuesday is the deadline for Italy to resubmit its budget proposals to the European Union after a showdown between Rome and Brussels over the government's spending plans that has rattled bond markets and weighed on the single currency. The progress of Brexit talks with the European Union has been another source of uncertainty for the euro and British pound. May said on Monday that there was still considerable unresolved issues as the two sides approach the endgame in negotiations from Britain's departure of the bloc. Officials have warned that there is dramatic progress by the end of Wednesday. There is unlikely to be a summit this month to prove a Brexit deal. The euro will remain under pressure as the Italian situation and headlines on the progress of Brexit negotiations will give enough food for thought for currency traders, said Morton Help. Against the euro edged up 1% higher at 12.29 above a June 2017 low of 12.16. It had fallen nearly 7% this year. Hedge funds have resumed shorting the euro in recent weeks as expectations of a diverging trend in economic growth and consequently interest rates encourage investors to borrow euros and invest the proceeds in dollars. The U.S. Federal Reserve is set to raise rates by 25 basis points in December, with 2 more hikes likely to follow in mid-2019 as wage pressures build in a booming economy, while the European Central Bank plans to end its bond buying scheme by the end of 2018. Analysts believe the yen will strengthen if global risk sentiment worsens thanks to its safe haven status. The yen will have a greater safe haven demand pool than the dollar if equities witness a further correction. We see the dollar yen downside in that scenario, said Nick Twildale, Chief Operating Officer at Rakuten Securities. And we're seeing, look at this with the crude oil here. Now with the $58 handle. Certainly that is resulting in a higher dollar CAD. And I'm surprised we haven't even pushed even higher, but certainly we've already made a pretty good run so far in dollar CAD. German investors downbeat on the economic rebound as morale stays weak. Investors do not expect the German economy to recover rapidly from a weak patch, the Zoo Research Institute said on Tuesday, and its monthly survey pointed to a subdued third quarter. Fears about trade disputes, the risk of a disorderly Brexit, and political uncertainty at home are weighing on Europe's largest economy, which is in the 9th year of growth. The survey showed economic sentiment among investors in Europe's biggest economy rising slightly to a negative 24.1. However, investors' assessment of the economy's current conditions fell to 58.2 from 70. Zoo said the survey reflected recent figures for industrial production, retail sales, and foreign trade in Germany, and potential towards weak growth in the third quarter. It added expectations for the next 6 months show no improvement. This means that at the moment, they do not expect to see a speedy recovery of the current weak development of the economy, said Zoo President Achim Wambach in a statement. Last week, economic advisors for German government/growth forecasts for this year to 1.6% from a previous estimate of 2.3%. And we're seeing the euro continue to move higher here. As we rebound here, it's probably that Italian news starts to dissipate a bit. And gold prices firm from a one-month low on bargain hunting. Gold prices edge higher on Tuesday as investors resort to bargain hunting after the price of metal fell to a one-month low, weighed down by a stronger dollar. It's been some time that we've seen this level, so we're seeing some buying here, said Ronald Lung. A firmer greenback makes bullion expensive for holders of other currencies as the commodity is priced in dollars. We're likely to see a retest of 1,200 before any uptrend is resumed, and certainly we've certainly seen that as we've come down here to this 1197 area here. Meanwhile, Asian shares paired losses on Tuesday as hopes of a de-escalation of Sino-U.S. trade war rose on a report that China's top trade negotiator was preparing to visit the United States ahead of a meeting between the two countries. So we'll go and get started here. As I mentioned, we had 1233 as our support, and then in the chat room I mentioned that there's a secondary support that came in on a daily. Well, the support, secondary support we had was 1217. We got a low of 1216. Let's go on and go back here with the euro. The key will be if we can get past this, which it looks like we will, 1245. If we can get past that 1245, that'll on this close, which we have here, has a market. Now we start on a new 2-hour bar. Certainly looking positive here. So really any pullbacks here is going to be the same area. It's going to be 1230 right there, 1235. 1235 will be the day support to watch for here in the euro. And we did mention that it's important if we can get a daily close above 1275. %23% will come in right there at 1282, basically almost 1283. That makes a reasonable target here, actually, on a very short-term basis. Makes sense that that'll take out just right here at this high. Do have an important area here, but 1289. We'll actually give it some room. We'll go with 1289 as the resistance level. And as I mentioned here, 1283 would be the 23%, with 1324 being the 38% this time. And actually the next key level would be right there, 1337. But 1324 would be the 38%. Let's go and move into cable. We had 2835. Well, that's what we had mentioned here, and we actually got as low as 2827. Here's the gap that we were talking about, 2859, but the resistance is going to come in right there. 29, right there. 2976. Still a good ways off, but once again, everything's tilting towards better news coming along. So once again, like I said, we'll probably the initial resistance is going to come in here at this 28, fill in the gap at 29.59. Maybe the market backs off a little bit, but the real move, like I said, once again would come in right here. No, I think the market could squeeze up there real quick, hit some stops, 29.76. Actually, if you look here, that same area by filling the gap is going to be the 38%. And once again, like I said, if you hit some stops, I think we could make it up there to that 29.76. So something to keep in mind, filling the gap would also take us to the 38%. Support. Yeah, it's going to be right there then. 28.70 for support. And moving into the Aussie. Well, we dipped just below this key 71.86 we had right there for support. And they've rebounded just a bit, not a whole lot, but this is the area we would expect them to start to find some decent buying, maybe just test just below that, which they did test just a little bit below. It's going to be right here. We'll look for support, tighten it up a bit. You see right there, 71.79 for support, 71.79. So not that far away from about 21 pips. And resistance comes in right there. On a very short-term basis, might be a little bit too close considering how fairly oversold. It's going to be 72.40, 72.40. For the Aussie, and we'll move right on into the Kiwi. This Kiwi looks very, very good. Look at that. That'll be support right there, 66.88. Q daily, we said was going to be 67.17. It looks like they're holding above that right now. And the resistance is going to be right there, 67.50. Actually, no, we're at 67.95. 67.95 right there will be resistance. And it's 68.45 where they'll eventually want to get to, but there'll be 67.95. And let's go move into the dollar CAD. Well, this move down here in crude oil is just pushing that move further higher. I mean, this is almost working inversely to a certain extent, but wow, moving into the $58 handle, we are really pushing this crude for all it's worth. And certainly that's translating into a higher dollar CAD. I mean, I'm surprised it's not even higher than we are already, but I would have thought this move right here, which is key, we talked about that before yesterday, and actually going into the Asian analysis, and right there at that 32.33, we've dipped below it, and now we're back on it. And that's really a key level right here, this 32.33. We'll pull this back. On a very short-term basis, really key if we're able to hang on and push that and try and move to the 32.88. I think the crude oil market is going to have to maintain its downward momentum, and then obviously the dollar assert itself. But wow, I think to me it feels almost as if they're really squeezing them right here. Did make it up right here to this 32.50. You can see that right there. There's actually just a hair, just a bit higher right there, 32.54. So we'll put that, call it 32.55 right there. It's going to be 32.55. It's 54.5 actually, but we'll go with 32.55. Maybe crude will give it one more extra little push, but wow, they're really squeezing this for all it's worth. Support, well, it's pretty clear support's going to come at 32.02. It's actually 02. And let's go move into the dollar Swissy. And we came up here and there's that resistance right here. Boy, it's been a heck of a move here so far. Paro 120. That's our resistance right there. And we're going to go on and keep that there, Paro 120, and support. Right there, par 68, which is about 31 pips away. This dollar Swiss has just been relentless. To me, it looks like it's come so far, but it's, at least for right now, not showing any signs of backing down. Every time it looks like it might be a little bit tired to just reassert, pull pairs back just a bit and reasserts itself. You can look right here. Little medium-legged doji, and then followed by the gravestone doji, and then we barely pull back and it reasserts itself again. This will be key right now. If we lose this right there, par 93, that'll open the door for them to correct further. So watch that par 93 here on the dollar Swiss. Right here, you see here's the close on this little medium-legged doji. Then you get a little bit of a gravestone doji right there. So it's this key area right here, par 93. They're defending it, but keep an eye on this. That'll open the door for them to move lower if we can get a 2-hour close below par 93. And with that, we'll move into to the dollar yen. Bit of a surprise because look, we've stayed fairly weak here, had a pretty decent pullback here in equities, but the dollar yen is still hanging around here. May have something to do more with the technicals at this point. Let's take a look at this on the daily. I just don't know. I mean, it's interesting to see the dollar yen still, we talked about it wanting to resolve itself higher, but we're getting this drag in equities, and you have to wonder whether or not, I mean, I can see it wanting to stay here, but with equities pulling back, you would at least expect this to pare back just a little bit further. I just don't know if we have enough to go and take us up here. This is a big area here, this 1493, but that's still a long ways off, and you have to wonder with the weakness we're seeing in equities. I don't expect the dollar yen to turn around and come apart, but at the same token, you would expect maybe even a bit of a pullback, and we're just really not seeing it. I think that probably knocked a lot of people out of the box on this run, and maybe we're just hanging around here. And the dollar yen does do that from times to just sit there. For now, we'll just go right there with that 1454. To me, it almost seems like a bit of a stretch here to think that we'll go higher. But from a technical standpoint, that's the next resistance. I'm just not sure if we can get past this. That 1422, that's a pretty good solid line here. It's already having a little bit of tough time. And don't forget, you have to factor in the weakness in equities. I'm going to stay with this 1422 Support's going to come in right there, 1355. We'll get it right there. And let's go moving now to the cash dollar index. Already had a pretty good run up here to this, just about here to this 97.73. And that's huge here, right here. We're looking at the daily. Right there. Got up as high as 97.70. Pairing back a little bit here. Resistance on the short-term basis is going to be right there. 97.57. 17 ticks away. 97.57. And support, there's some short-term support coming here at this 29, but this would result in a pretty good little move here. Just call it right there, 97.17, 97.17. But really, I think that it's going to be, this going to be a good resistance right there, 97.57 on the cash dollar index for this morning. Now let's go move into gold. Now gold, we're actually, I just mentioned earlier, just a little while ago, this is a pretty good little area here, this 1197, and sure enough, they've made it down here where you start to see the little bit of short cover, and we're continuing to go on and see this. Actually, this is on a 5-minute chart, but this move to 97, that's that key area that we've been looking at for over a month and a half, remember? We made it down here, and look, you can see here that 1198 happens to be the 78%, so should expect to see some little bit of short covering come in here, and also seeing a little mini hammer right here, so it makes some logical sense. And keep an eye on this cash dollar index. If we do start to pair back from this area, that'll at least open the door for some decent short covering in gold. Probably be able to take us back to about the 1206 area here. So for right now, it's pretty obvious where support is, 1197. This 1202 held up, or at least that's where they were going to yesterday, and held that. Eventually we got and went a little bit lower, saw a rebound back to 12, almost 1206 before now making this move down here to 1197. And let's go move into the 30-year bond. That's going to be support right there. 3720. That's still going to go on hold from yesterday. Resistance, 3827, right there, 3827. We had 3816. I got up here all the way up here to 21. So it's actually going to be 27 for today. And let's go into the bond. That will be resistance for today. It's going to be 60.48, just above those highs, just a nick above those highs of 60.48. And that'll be support right there. And allow them to take out those lows just by a bit. It's going to be 59.89 here on the buns for support. Surprised that the DAX is even holding up as well. A lot of everything is going on in Europe. But this whole area is pretty big right here. And that's where the run had some trouble with this 11,450. We'll give a little bit of room in case you want to do just a bit of short covering. That's going to be 11,487. And that'll be support right there. That's the next level, but we're trying to get a little bit of covering in here on a real short-term basis. This is what's going to trigger it if we go lower, and that's going to be right there, 11,336, 11,336. That'll trigger it for it to move lower, almost like a pivot. Unbelievable. What do you know? I guess because it's relatively quiet, we're have a little bit of a finishing a bit early, but we're seeing the euro continue to move a little bit higher here. Finally, even up to 1262. If we want to take a look at it on a 30-minute for a closer look, has defended that area from yesterday at 1234, and then that secondary support at 1217. A little bit of volume coming in right there at this 1265, right there. So you may see a bit of a pair back. Right there, some decent volume. On a very short-term basis. Next key level really is this 1273. So if we get able to get this move up to 1273, probably looking for them to pull back a little bit more on that. Once again, there's that 1273. And looky who just filled the gap. Cable. And that was at the 38%. I hope some of y'all caught that because I didn't even see it right now. Probably should have had an alarm going. Just filled the gap, and we're pulling back already 20 pips after filling the gap. And that happened to coincide with the 38%. Well, I didn't even see that. Focusing on the bunds and the bonds, I didn't even see that. And look at that. Nice pullback from that. We even mentioned that yesterday in the chat room about them, going for that as a target. This is when it looked good here, and then of course we paired back and a nice little pullback from that area. Right to the pip. Gold is made here to the 1200. We might see a little bit of a pullback from there now. We'll see. Actually, almost up to 1201 after coming here down here to 1197. And we'll take a look here with the dollar CAD. Still holding up relatively well. Look at that, almost no movement here over the last few hours. You would think that these were 15-minute bars or something. Those are 2-hour bars and almost no movement here. But certainly look at this. This move in crude oil has just been it's been something else. Certainly keeping the dollar CAD up in here. Dollar yen still hanging around here. Right around this 114 area. I'm surprised that we haven't seen at least a little bit more pull on this in light of the downdraft we've seen here in equities. It's a pretty good little fall too. Look at that. Keep an eye on this euro up here to 73. We talked about that. Look at that. Right there. Made up to this 101.2 here in gold. A little bit more volume comes in it right there. You see that? 1202. So that'll give a nice little target for them to move to 1202. And actually, that was yesterday's support, if you remember. So you can come in there and make it up to 1202 and then probably ease back a little bit from there. That'll be 1202.1. Keep an eye, as we said, on this Swissy, because that par 93, it closed below this par 93 on a 2-hour close, will open the door for a little bit further pullback. But once again, the Swissy's kind of doing its own thing. We all know that. So for once, we'll be able to finish a little bit early. It's relatively quiet. Keep an eye on the euro coming up to this 1273. Gold up here to 1202. Cable has already filled the gap, and that came in at the 38%. We saw a quick little 20-pip pullback. Hopefully some of y'all caught that. And thanks for joining us here on the European Crossover webinar. We're actually finishing just a few moments early. And good luck trading to everyone.